50 to, you got to the 50s and really to the 30s to see a multiple year drought. So statistically, we have very, very few reference points to draw upon to say that we can be better. Subsurface marsh is a problem, but we have recharged, we're recharging. I would say about the Mississippi River east is starting to see good moisture. And then you go out to Kansas problem, Iowa's pinpoint areas, North Dakota, South Dakota, and parts of Minnesota is where the drought will show up. Much yield will be, so the question we had to ask ourselves, how much will yield be below the 10-year average? This is question. This is probably the central question that you have to answer in the next 3 months. What's the weather going to be? Has anybody here got a direct link to God can tell me what the weather is going to be? Please tell me afterwards. I would like to meet that person. It's a tough, tough issue. I would argue, starting in, with no clairvoyance, we got moisture, you got to assume for average yield. The seasonal drought index, well, that is drought. And what's happened is this dryness down here has been extreme. It's driven now the cattle out and moved the cattle north. So you're moving the cattle, a lot of cattle up in these areas. That's what the last inventory, cattle inventory said. Now, when you look at the moisture level over here, it says the band is almost Mississippi. So the central and eastern corn belt down here is going to be, I just came through Georgia. I left Sarasota, Florida, to come back to this meeting. It tells you how much I love you guys. I left Sarasota, Florida at 82 degrees to come back up here. And going through Georgia, hit the moisture, it was wet. Coming through Tennessee, pastures looked great, the wheat looked good. So they're recharging. Now, as one gentleman was telling me about his tile, he's never put tile out in January. And so it runs after it gets in, but we're not abundant. So we know we have probably a year where we're not going to have a bumper crop, but we are getting back if Mother Nature cooperates. Well, look at the yield variability historically. We've had these 93, this most recent year. Look at what happened the year after the drought. And then 2003, the year after the drought. So historically, and I'll show you another chart, right in here, basically, I'm saying right now, and I'm being pretty aggressive, 5% off trend line would be 1,558. That's where you would accept. I'm assuming some dryness in the western corn belt. I'm assuming some standard yield is going to encompass the market. This is another way of looking at it. And here again, different people have a different explanation. If you look at the standard deviation around trend, it's the statistical way to explain the data. You're trying to explain if this is the trend, how much we go above and below the trend on an annual basis. And you can see historically, back in the 70s, you'd have a bad year, then you'd bounce up. You have a bad year, then you'd bounce up. So you had this evening. It was about equal distribution. When you had a really bad year, then you had a pretty good year, really eclectic, even out the trend. But then when you got to about 1992, we've basically been at the trend. We've only had two, really, I'd say one good year since 1994 that we've been significantly above trend. But the last 3 years, we've been statistically below to the 10-year trend, average 10 years. We've had 3 years of really deficient yields. So what that is built into your mindset is, if I put it in a bin with this demand base that we got, I'm going to get bailed out. Anybody sold early, you're going to get, basically got hurt. So anybody that marketed in the last 3 years with these reduced yields got hurt. History says you're going to have an above trend year coming. What's going to happen if we increase the acres and you have above trend yield and demand's basically been rationed? What is that the formula for? You know it, baby. So I think I'm basically leading up to, I'm trying to lead you, I'm just letting you graze it a little at a time, just nibble away at it. I'll give you the punchline. Now this is the bull. This, and I cannot argue, China, expansion, its growth rate. Oh, I took a glass of water in the middle of a presentation. I guess the Republicans are not supposed to do that anymore. We're not supposed to drink water anymore. That's an inside joke unless you okay. You guys got it. Okay. So China is growing. Now the thing about China is their production is increasing, but also is their consumption. So they're producing about what consumption. But what it sets a situation is their expansion in, you got very big plants for aquaculture, and they're the largest pork producer in the world. And so they're raising a lot of meat. And so they have to have a lot of protein and a lot of foodstuffs to feed those hogs. So if they have a weather event, this would be very, very bullish to the markets, and this would make grain exports. So in many ways, we are becoming, in the corn market and soybean market, hostage to Chinese weather patterns. And while, here again, I would defer to a weather specialist, a casual, and I would underline the word casual observation I've had, is when North Dakota, South Dakota, Minnesota has a good year, China seems to have a decent year too. But they're coming in that time period that they're cold and dry right now, and by March, April, they don't get too much moisture, so we're going to know if they're going to have any weather stress. But if they would have a weather stress, this is the bull's ace in the hole. So if you're a bull looking for something to bail you out, this is your biggest one. China have, because they have the need. If they have some weather problems, that would be a variable to look at. Now that's not what you call bullish, guys. Exports have fallen off a cliff in the last 3 years, directly related to corn prices. High prices, best cure for high prices is high prices. That's about as best explanation you can see for that. This is probably my most troubling fundamental. This is, if you look at these years, and you go back, and I didn't go back to 73, 74, I probably should have, but if you look at the stocks at the start of the year, this is the stocks at the start of the year, what is the pattern when you have low stocks at the beginning of January? What's the pattern by fall? Is it going down? No. We're going side. We only had 1 year here where we kind of kept it, then we actually risen. But the behavior historically is stocks increase over time because high prices ration usage. So the stocks, we already seen in the last report, went from 602 to 632. You could argue that you could easily see 750 to 800 stocks starting out the next year if demand really starts to accelerate, and demand will only start to accelerate if China starts having some weather problems. Okay? I don't think stocks are going to get more bearish than 632. I think we'll be post-July before that becomes a variable for old crop corn. But as we know, that the market has in the last 9 days basically taken some real heat out of the July corn. We're right now on some technical support. I expect big returns to push corn acres to close to records. How many people here are going to produce less corn acres this year? Okay, a few guys. How many people are going to plant more corn acres? Ah, come on, you guys are lying. Okay. You're Midwest farmers. That's about even. You guys, that's interesting. I thought I'd see a little more response here. We are picking up that the cotton farmers are thinking they're going to reduce by 1 million acres. We know we've reduced some other specialty crops that are going to produce. We know we lost some. We've got about 3.5 to 4 million acres floating around that we don't know where it's going to go to. And most people in the trade believe it's going to be to corn and beans. I'm in the 97, 99 arena, and Mother Nature will determine what that number is. I think you guys will plant corn if you get the capability. But the issue at hand is profitability. High profitability has motivated this explosion in corn values, has motivated explosion in land prices, has motivated interest in planting more acres, and as capitalists, when you look at, this is USDA data. Now, this is not my data, so don't yell at me. This is USDA data. Now, you can yell at USDA and say they're full of, but this is USDA. This is the best we got, guys, and your taxes are paying for it, so don't yell too much. So the big question is, how fast will corn go back to historical profit levels? And this is what we're all worried about. When will we go back to, this was $500 contribution to land, labor, and management. And if we're charging our land out, old land, $250, $300, we're making $250, $300 an acre. Down here, if we go back to $150, $200 an acre, we're losing $150 an acre. And if we're cash renting that land, we don't want to be the person, we want to be the guy that let the other guy cash rent during that process, you know what I'm saying? So this is one of the debates that we'll have.